Thank you all for joining us for the second session of Building an Inclusive Recovery, the Clinton Foundation series to address racial and economic disparities in the wake of COVID-19. I hope wherever you're tuning in from, you're staying healthy and safe. And I'd like to begin by expressing my gratitude to our lead sponsor of this session, Caliber Home Loans, and our supporting partner for the series, MasterCard Center for Inclusive Growth. I also want to thank those who've already made commitments to action as part of the series. And throughout the course of today's sessions, I hope all of you will think about specific ways you and your organizations can make a difference or partner with others to increase your impact. Our topic today, the housing crisis, has plagued America since long before the COVID-19 epidemic. But now it's even more urgent, especially as densely populated urban areas without enough affordable housing stock face new challenges from both the public health and economic impacts of the pandemic, affecting both renters and homeowners. Homeownership has long been recognized as one of the most effective and proven solutions to building wealth and financial stability in America. But even before the pandemic, homeownership rates for Black Americans were at an all-time low, with just 40.6% of Black Americans owning a home, compared to 76% of white Americans. Latino homeownership is the fastest growing of any group in the nation, but still it too significantly lags behind white ownership by more than 24%. Many factors have led to these disparities, including a long history of structural racism and housing practices. And if we have any hope of closing the racial wealth gap, which even before COVID had widened to the point where the median net worth of white households was 13 times larger than Black households and 10 times larger than Latino households, we'll have to close the homeownership gap. The good news is that whether through smart government policies or cross-sector partnerships, we know there are proven rates to make the dream of homeownership a reality for more Americans of all backgrounds. For example, when I was president, through a number of efforts, including the reform of the Community Reinvestment Act, home purchase loans to Black Americans increased by 55%, to Latinos by 125%, to low and moderate income borrowers by 49%. Other federal policies and financial tools like the New Markets Tax Credits, empowerment zones, more recently opportunity zones, if they're used equitably and in coordination with city governments and communities, can be effective in creating more affordable housing and helping provide the necessary resources to revitalize underserved communities. Today, you'll hear from policymakers, community leaders, and nonprofit and corporate leaders who've been finding effective ways to address the housing crisis, both before and during the pandemic. These are proven, people-centered approaches, ready to be scaled and replicated, and I hope you'll find ways to build on them, especially since we have an incoming administration in Washington much more committed to partner in addressing the housing crisis. The time is now to build up the regional and national networks to help us make a big difference as quickly as we possibly can, and to highlight the opportunities where federal support can best advance innovative city and community-based work. Thank you all for being part of that conversation. I'm looking forward to a productive meeting. Now for our first panel, I'm pleased to introduce Mayor Keisha Lance Bottoms of Atlanta and Sanjeev Das, CEO of Caliber Home Loans. Thank you very much. We're very lucky to have Mayor Keisha Lance Bottoms of the city of Atlanta and Sanjeev Das, the CEO of Caliber Home Loans, to be with us today to discuss where we are and where we should go with housing in America. Let's begin with the mayor. You ran for mayor, pledging to invest more than $1 billion from public, private, and philanthropic sources to produce and preserve 20,000 affordable homes by 2026. First, what did COVID do to your project, and how are you doing on it, and what's going to happen?
Well, it's an honor to join you. And what we saw through COVID is really this need for us to move faster and amplify what we were already doing, because affordable housing and workforce housing is a challenge that, very interestingly, I was reading the biography of Maynard Jackson, the first African American mayor. As you know, in Atlanta, he was elected in 1973, and in his biography, he talks about the need for affordable and workforce housing in Atlanta. So it's been fascinating to me that this is still a challenge for us. So we set this very ambitious goal, as you mentioned, $1 billion investment, 500 million in private investment, 500 million in public investment. And we had some very clear metrics and data points that we were trying to get to. We are already about 5,000 units in, but with COVID, what we've seen is there's a need to provide even additional assistance. So thankfully, we were able to put in some rental assistance programs. We call for the halting of evictions for our public housing partners. It helped, but again, our communities are in need. They were in need pre-pandemic. They're going to be in need post-pandemic. But what we have found is these discussions that happen inside of City Hall and inside these boardrooms really needed to be amplified to our communities to, one, help relieve anxiety, but also to let people know that there were resources available that could help get them through the pandemic. I've been very pleased that so many people have attempted to access those resources inside the city of Atlanta. But what is concerning to me, the number of applicants that we receive from the metropolitan area. So Atlanta is just one city in a larger metropolitan region. And unless all of our partners are operating on the same page, it's going to continue to be a challenge for our state, which is why we need national leadership and guidance in this area, because clearly the needs exceed just the city limits of Atlanta.
Sanjeev, what's your take on this? You have operations in all of the states, and I think also in small town and rural areas as well as urban areas. Where are we now with the housing challenges as it relates to cities, disparate racial and ethnic groups, and how's what we're doing today going to affect what the post-COVID economy looks like?
Sure, and thank you, Mr. President, for the honor to speak with you, and Mayor Bottoms, honored to be with you as well to talk about this very important topic. Mr. President, as you rightly pointed out, we are, Caliber is one of the largest lenders. It's the fourth largest non-bank institution in the country with a lot of presence across the country. And the most important thing, though, is that this is, and I learned this from my experience with running the operations of a large bank back in 2008 when the financial crisis happened, that this is actually a ground level issue and needs to be dealt with communities at the ground level. So I'm somewhat privileged. I have 2,000 people who actually work on the field at the ground level, because what I've noticed is that when a situation like this happens, like the one we just experienced with COVID, with people losing jobs, and invariably, and it doesn't have to, is that when somebody loses a job, they then lose their ability to pay their mortgage and eventually lose their home. In my opinion, that's a pattern that needs to be broken. And we broke it in 2008 when we launched a series of forbearance programs across the country. But the sad thing in all of this is it's almost the opposite of going to a doctor when somebody is in distress. People actually don't call us when there's financial distress because they don't know. And it is really important for us to work with the communities to make sure that people know what programs are available to them. Mr. President, we have a ton of programs across this country. We just don't implement them because folks aren't aware of what opportunities are available to them. So I'm going to start with that first and say that, look, we've spent a lot of time in the last 6 months just educating people about what opportunities are available to them, what forbearance programs are available to them so that we can help them stay in their home. I often tell people our responsibility as lenders is not just about helping people buy a home, but it's equally important to help them stay in it. And right now we are facing a bit of a crisis on the second issue as well, in terms of helping people keep their homes as opposed to just buying new homes. On the issue of helping, including African Americans, the Latinos, and the minorities into more home ownership, again, the field force of 2,000 people are actively engaged in deploying programs that are around low down payment assistance. The interesting thing in all of this is that with interest rates as low as they've been, millions of Americans have been able to refinance their mortgage, but it's equally interesting to see how many other millions have not been able to take advantage of it because they were either unemployed or they were furloughed, or there were some circumstances happened because of which they were not able to take advantage of low interest rates. And so we've been really trying to help people with low down payment assistance, which are, again, lots of programs available with the FHA, the VA, the USDA. The mayor herself has some great programs in the city of Atlanta. So we are working very closely with the community groups, Mr. President, to make sure that we engage people in these kind of low down payment assistance programs so they can come into home ownership at a time when rates are really low. And we find that there's a vast preponderance of minority groups in these low down payment programs, and it's been very successful. For an $80 billion originator like us, I would say about 35 to 40% of our originations today is in these low down payment assistance programs. And I'm very encouraged by that. And I have a few thoughts as we sort of talk more about it, about how we can get more involvement and engagement from the larger lenders in the country, because I don't see that happening.
Well, thanks. Let's talk about this a little more, because I think it's obvious that in normal times, if people can't pay their mortgage, some of them have to be foreclosed on. It's sometimes you'll make mistakes. Sometimes people won't even tell you the truth about what's their circumstances. But it can't be good for you or anybody else to have massive foreclosures. The whole system is, I think, been put at risk by the COVID crisis. And I know, Mayor, you had a big anti-displacement initiative. So tell us a little about how Atlanta's handled this and tried to stop unwarranted foreclosures.
So this was something that actually began when I was a member of city council. What we were seeing in Atlanta is redevelopment, gentrification in Atlanta, and many of our legacy residents were being pushed out for reasons as simple as not being able to pay the property taxes on their homes, along with the complexities of not often having proper estate planning in place. Grandmama and granddaddy own the home. They leave it to the uncle or the aunt, and nobody is caring for the taxes, etc. So this is a challenge that we see that's very common in the African American community. The displacement zone that we created when I was on city council was in partnership with many of our philanthropic and our corporate partners in the shadows of the Mercedes-Benz Stadium, west side of Atlanta, historically African-American community. We put in place a funding mechanism. So for 20 years, homeowners could tap into this funding to help pay their rising property taxes. So early in my tenure as mayor, we had an opportunity to engage in a development deal with CIM to develop a property called the Gulch, which again is near the Mercedes-Benz Stadium. This is going to be the largest redevelopment, commercial redevelopment in the Southeast over the last 30 years. It's going to create about 30 new city blocks in our city. So again, starting to think about what could we deliver for our communities as this economic benefit comes to our city. We created an affordable housing trust fund in addition to developing that economic development deal, knowing that surely there will be challenges on the west side of Atlanta with affordable housing, But as the city begins to grow in different corners, the entire city is impacted. So we wanted some flexibility with an anti-displacement zone, the same way we had created it on the west side, but to be able to use it throughout the city. We created this affordable housing trust fund. There's going to be about $5 million that's going to go into that trust fund to allow us to create these displacement free zones throughout the city. But again, it's just a drop in the bucket. $5 million sounds like a lot, but it's not. It can go very quickly. And again, the challenges that we have, and I think the one that we have got to do a better job on is the estate planning. I'm seeing it in my family. I see it with my grandparents' home, that nobody bothered to establish a will. The kids are responsible for taking care of the home. I've seen it with cousins, parents, etc. And so that's a big challenge because we often have predatory folk coming in who take advantage of people who may have a family home that's paid for. It's been paid for many years. They offer them $75,000. It sounds like a lot of money, except for the home may be worth $750,000. So that's the other area that we've got to address. And part of that we've really been pushing on, one, having the funding source in place, but also educating people on the values of these properties and these family-owned properties, and the reasons and the need for them to hold on to them, to keep them in their families, to be able to rent out and generate income for years to come.
Thank you. Sanjeev, what are you seeing around the country in terms of any new challenges in keeping people in their homes because of COVID? How are you dealing with it? And how do the challenges vary from place to place?
But Mr. President, the single biggest issue right now is that we are all kind of waiting for a stimulus bill because it did have a pretty significant impact in the first 6 months in people being able to have the confidence, and I use the word confidence, to stay in their homes and meet their financial needs. I think that's it is something that we are feeling at the ground level. I am concerned that while forbearance rates were relatively low during the crisis, that delinquency rates are starting to rise. And I'm particularly concerned about those that took some of the programs I talked about, the FHA, VA programs. Delinquency rates in those groups are starting to get into double digits, and I am concerned where this is all going to land if we don't do something really fast. So in keeping with the objective of this forum, I really think that there is a call to action to all of us to get onto this really, really quickly. My job as a lender, and I don't absolve my responsibilities in this to anybody, is to continue to make sure that we are helping every single customer stay in their home. In fact, we've changed our metric, and I urge all bankers and all lenders to do the same thing. We've changed our metric from not counting how many loans we saved, but how many homes we saved. And I think I tried that in 2008 when I took on the role of CEO and president for Citibank's mortgage business, which was, if you remember, one of the largest banks in a crisis at the time, and we did the same thing. We measured how many homes we saved, not how many loans we saved. And in the process, as you rightly pointed out, a foreclosure is not good for anybody. It's not good for the consumer, it's not good for a bank, and it's terrible for a community. In 2010, when I visited the communities in Florida and I saw that it wasn't a home that was being foreclosed, but the series of homes across the street that were being foreclosed and how communities and schools were coming apart, it was heart-wrenching. And so we decided that we would educate people on the loan modification programs that were available to them. We are doing the same thing today, educating people. If somebody goes from forbearance to delinquency, or they don't write to us or don't contact us, we reach out to them and tell them, did you realize these are the opportunities available to you? And we help modify their loans. We extend the term of their loan. We push their payments out to the tail end of their mortgage, whatever it takes to keep people in their homes. And I find that that's a responsibility we all own, Mr. President.
Do you both agree then, I think, that there should be a second round of stimulus from the federal government to help you get through this?
Yeah, I completely agree. And even one of the challenges we're having in Atlanta, Mr. President, we were embarking upon a $200 million affordable housing bond in the city, which we had to put the brakes on when COVID hit, because we still don't know what the impact's going to be to our city as a whole. And it's concerning because the need for housing is not going away. The need for workforce housing is not going away in our city. But even these avenues that we were on the verge of making sure that we were still pushing forward, we've had to stop simply not necessarily based on where we are now, but not knowing where we will be in the future. And I'll give the example, Hartsfield-Jackson Atlanta International Airport. I'm grateful. They got $331 million, I believe, in stimulus money directly to the airport. The city of Atlanta is the only city in our state that got direct funding. We only got it at $88 million. The airport funds are an enterprise fund. We can't touch it to pay off bondholders and to maintain our city operations. So there certainly is a need for the private sector to receive this funding, but states and cities across this country are hurting, and we don't know what to anticipate because our revenues are continuing to drop. And if you were a city under 500,000 residents, you did not get that funding directly. It either went directly to your county or directly to the state.
Mr. President,
Let me ask you, yeah, you agree?
I totally agree. In fact, I'd go a little further, but I'll come back to it.
What was your reaction to what the mayor said about the lack of knowledge about how the system works and estate planning and home management and all of that bleeds into this affordability challenge? How did you react to that? I know you spent a lot of time trying to educate the people who do business with you, and you made a commitment here as a part of this process to try to do more financial and economic education with young people. Talk about that a little bit. How much of a problem is that going to be? And how can we basically use this coming out of COVID? And I don't think it's too soon to talk about that, because we know we've got at least 2 vaccines now that will work, even though they can't be widely distributed till next year. How important is it to make sure that we have people who are empowered through economic literacy to make good decisions in this coming out of the recovery process?
So, Mr. President, I completely agree with what Mayor Bottoms just said about the generational planning. I'll just give it a slightly different angle if I can. It's interesting when we were doing work with the African American communities, one of the things we realized is that it's one thing to educate people on literacy and financial literacy. It's another thing to actually show people that if they don't really understand financial literacy and they don't pass on that quote unquote soft skill to their next generation, then it becomes a generational issue, or lack of home ownership becomes a generational issue, because these are things, whether we like it or not, we learn from our previous generation, mostly from our parents. The experience of the last generation, or our generation, so to speak, from the financial crisis and from this crisis is not a pleasant one. And it's not one that will be passed on to the next generation as one of good healthy home ownership, unless there is a very strong culture of repair and resurrecting from the crisis that has occurred almost twice in the last 10 years. So I feel very, very strongly, not just about financial literacy, but also making sure that we help repair and help people stay in their homes so that people realize the value of responsible borrowing, the value of credit, the value of saving and paying, things that we were talking the other day with Andrea about it, Grameen. How do you show people that you can actually start with something small, start to save, create a culture of saving and repaying before you start to evolve into more credit? I actually feel that it is particularly important for the minority communities to understand that, and for us as lenders to teach it. I do not absolve us of the responsibility. I could blame it all on the government and the lack of program, but I do think that individual lenders own it. I also feel very strongly about one other issue, Mr. President, which is that financial inclusion and housing inclusion is very, very strongly linked to employment, and you understand that way better than any one of us. And I feel that it's not only our responsibility as lenders to educate people on financial literacy, but it's also important for us as employers to bring people back into the workforce by giving them the opportunity to come intern with us, train with us. Re-employment, I think, is going to be the single biggest thing for us in the coming 12 to 24 months, and we should all own that responsibility as the private sector as much as the public sector.
I want to give both of you a chance to say anything you'd like before we wrap up here. We got a couple more minutes, but let's look at where we are. The Black community, in terms of homeownership, has not recovered fully from the 2008 crisis. If you look at the long pattern, the homeownership among Black Americans now is almost 20% lower than it was the day I left office 20 years ago. Now, we had really dramatically expanded it when I was there, but still, we have, I think it's higher among Latinos now, and I believe it's largely because a lot of them are first-time new home buyers and don't have the legacy issues that Mayor Bottoms was talking about in her own and other families. But we really need to, if we're going to grow together, and everybody who's willing to work hard and has access to capital and all of that, we're going to have to examine the problems that we're bringing to the dance here, and try to have adequate structural responses. So I'd like to give you a chance to answer that. The other thing I want you to talk about is that briefly is an issue that's being debated in New York a lot, which is, should we just accept the fact that for a lot of young single people, there's so much more mobility, even young families, that we should be making provision for more, you may do more home building, but you may want to have more long-term renters. And is that a good or a bad thing? A lot of people are saying that. When I was, we did a lot of Section 8 housing vouchers when I was president. And at least in the short term, it had a very positive impact by allowing economic integration so that poor people could live in middle-class neighborhoods and their kids could go to school together. And there were a lot of studies at the time that it increased economic mobility for the low-income people, including Black and other racial minority kids. I think all of this needs to be thought about as we go forward. So I'll just give you a chance to say whatever you want to say about that. But should we think more about how to provide for rental properties in mixed income neighborhoods? Should we have a different approach to people, as Mayor Bottoms said, who are stuck with legacy issues and those that are at least free to make a fresh start? And what kind of government policies do you want to come out of this? And the other thing I would like to just give you a chance to comment on is, do you believe the repeal of the state and local tax deduction, even though it has an exemption for lower income people, in fact, has hurt them because it is undermining the resources that cities have to integrate them and states have to integrate them into the larger economy. So those are my sort of questions. You can close, both of you, with whatever you'd like to say. Mayor?
So, as you both know, this is a very complex issue. So even I gave the example of my grandparents. My grandparents were grandchildren of people who were once enslaved. So even the notion of home ownership was something that was fairly new to our family. So it is we're not that far removed in many of our families, despite the fact that I'm sitting here as mayor of Atlanta. So there is that education component, and I agree it's incumbent upon all of us to make sure that people have programs and access to resources, because it really builds on top of each other. So we recently had a home ownership repair program. Well, if you didn't have clear title to the home, you couldn't access these free resources to repair the home that's in disrepair, that then makes you likely to come to get someone who's offering you a few $1,000s for your house, and you're going to take the money because you don't have the money to repair it. So it's this kind of chicken and egg situation that we're dealing with in our city. On top of that, the education piece is a huge component of it. Even in these areas where we have affordable housing and workforce housing, it's still a challenge because our schools are lagging behind. My neighborhood's a great example of that. My husband is a corporate executive. I am the mayor of Atlanta. I live in a neighborhood that has not recovered from the 2008 crisis. I still owe more on my home than its value. And my schools in my neighborhood rank pretty much at the bottom of all of our public schools. So that's a challenge. So we have to address it. We can't address one or the other. We have to address it comprehensively. And then just in terms of how we've approached it in Atlanta, and then I've said over the past few months, one of the silver linings of COVID, I've had an opportunity to move faster and be creative with things coming out of my administration, because people know that we have to deliver quickly to our community. So it's not getting bogged down in a lot of the debate that we often see when we're trying to push things through legislatively. But we're looking at our zoning code. So in an effort, as you mentioned in New York, with younger people moving closer to home, moving back home, we're now relaxing some of our zoning code so that if I have a single family home, our lots are pretty big in a lot of neighborhoods in Atlanta, you can now build another structure in the backyard, whether it be an in-law suite or whether it be something for your kids who now move back home. So we've tried to be very thoughtful and creative, but I think whatever the legislative pieces that go along with that and our tax structures, et cetera, they've got to be able to support what we're trying to do in our cities, because we know our communities and our needs better than anyone.
Thank you. That was fascinating. Sanjay?
Mr. President, I will say this. Clearly, the workforce is changing. It is becoming more mobile, and we are relying a lot on the new digital age. And so the construct of home ownership is changing a little bit. I always sort of, when I first came to this country 20 years ago, having worked internationally in different markets, I realized that if we define home ownership more broadly as shelter, we'd think about it differently. We'd think about renting, we'd think about home ownership, sort of kind of in the context of essentially providing shelter. I do feel that there is a bridge between the two in terms of rent to own, and some of those programs are actually quite successful in different parts of the world. The private sector is trying it in the US, and I think that the ability to have mobility and yet create stability, which is what, as we get into household formation, people tend to want to buy a home so they can create stable homes and stable communities. There's something emotionally appealing about it. I think that is a very important consideration for us to make. I do think, though, and I'll go back to my fundamental premise, because I'm really fascinated by this urge to action and this call to action and ownership. I really think that there are three things that homeowners that comes in the way of affordability and home ownership in the low to middle income communities. And I think it's basically people not understanding the number of down payment programs that are available to them, people not understanding credit availability and not thinking about credit availability as we know about it. And of course, affordability is becoming an issue because of just the lack of supply. And so I go back to the fundamental construct of saying, let's keep teaching people how to own homes and how to become financially literate.
Thank you. Thank you, Mayor. This was a great session, and I'm looking forward to what happens the rest of the day, but I wish you well, and I thank you for what you're trying to do, both of you. Thank you.
Thank you, Mr. President.
Thank you, and I want to thank Secretary Julian Castro and Maurice Jones, the leader of LISC, for joining us today to talk about the housing crisis, where we are, where we're going. First of all, Secretary Castro, before the COVID crisis happened, we had various and persistent inequalities in housing that had been made worse by the 2008 crash, from which we had not fully recovered, at least in terms of economic inclusion. So what's your brief take on what the state of affordable housing in America is today?
Well, Mr. President, thank you so much for having me today, and thank you for the work of the Clinton Foundation. It's also great to be with Maurice, who's doing fantastic work, I know, there at LISC, and who did his own round through HUD and has spoken about very, very well. So if I had to describe it in one line, I would say that we have an affordable housing crisis out there in many communities throughout the United States, and that preceded COVID-19. As you said, I mean, coming into 2020, what we had was a home ownership rate that was still lower than it had been for most of the last 20 years, that never fully recovered from the Great Recession, particularly in communities of color. Black home ownership rates the Black home ownership rate had been decimated after the Great Recession and was just beginning to climb back up. We saw rents spiking in communities big and small throughout the United States. As you know, every couple of years, HUD does something that it calls a worst case housing needs assessment to determine the number of households across the United States. These are folks who are renters, who are making less than 50% of an area median income, who are paying more than 50% of their income in rent every month, or live in severely inadequate housing, or both of those things. And in 2017, there were 7.7 million households that fit that description. Now, mind you, this was a few 100,000 better than the 2015 assessment, but still overall was much worse than we had seen pre-Great Recession. On top of that, even though we saw during the Obama administration about a 10 or 11% overall decrease in homelessness, we started to see homelessness tick back up. So we see a challenge, a deep challenge in our country with supply that is affordable to lower income and to middle class families, and the ability of families to access decent housing throughout our country.
So, Maurice, what has LISC done during COVID to try to minimize the problem, at least keep it from getting worse?
Well, first, I echo the Secretary's thanks, Mr. President, for having us. It's nice to be with the Secretary as well. LISC has been busy on 2 or 3 fronts in this regard. One, we've been providing direct cash assistance to community-based organizations who are in turn providing that cash assistance to individuals. And individuals are using those funds to pay rent, to pay utilities, to buy food, etc. So one big piece of this is just simply we need more cash assistance going directly to individuals. Lists use trusted community groups in order to do that. Secondly, what we've been trying to do is to continue to invest in housing initiatives that we have going on around the country and continuing to aggregate capital to do it. So, for example, we launched over a year ago a fund in the San Francisco Bay Area, which has some of the least affordable housing in the country. And when we started, had a gap in affordable housing somewhere to the tune of 500,000 units in terms of what the demand was and what the actual supply was. Well, we partnered with the Chan Zuckerberg Initiative, with the San Francisco Foundation, with the Ford Foundation, with JP Morgan Chase, with Facebook. And we launched a $500 million fund for housing in that region, housing that would range from being affordable for folks who are on the verge of homelessness, earning around 30% of the area median income, all the way up to the missing middle. Well, we made sure that we continue to raise capital for this fund and that we continue to invest in nonprofit partners and other developers who were both preserving and producing new supply here. We've done that in San Francisco, we've done it in Detroit, we're doing it in Charlotte. And so we are trying to apropos to the Secretary's piece, we've got an incredibly undersupply. Well, let me put it another way. We have an oversupply of luxury multifamily housing in the country. No problem with that. We have an undersupply of affordable housing for our workers and others. We have tried to continue to invest in efforts locally around the country that are trying to get at that problem. And it is one of America's greatest challenges in our eyes.
Secretary Castro, I know you agree with what he said, but what should our policy be? You know, when back in the dark ages when I was in office, trying to end the racial disparities in home ownership and also use HUD policy to promote economic mobility. For example, one of the most successful things we did beginning under your predecessor as mayor of San Antonio, Henry Cisneros, and continuing under Andrew Cuomo, now the governor of New York, was these Section 8 housing vouchers, because we were able to move people around in response to the evidence that if low-income families also had secure housing in and around middle-income people, their kids would do better in school and they were more likely to generate more income and more mobility. But where are we now with all that? I know we could start with homelessness if you want. I know in Atlanta, the Blank Family Foundation did some things to try to reduce homeless. I know that there's an effort in Pittsburgh. I know of several other efforts, and you mentioned San Francisco, and I know the problems of homelessness in the Los Angeles area too. What should we do about it?
Yeah. I think we have a lot of tools in the toolbox, and some of those are tried and true. Some of them are newer, but show a lot of promise. You know, when it comes to homelessness, for instance, one of the most effective policy approaches over the last few years has been a housing first approach. Instead of making people jump through hoops to get into permanent supportive housing, you actually put them in there and give them that opportunity, and that helps stabilize a person and a family and helps them address other issues or challenges that they might have. But as you know, President-elect Biden has a $640 billion plan on housing to invest $640 billion over 10 years. And one of the things that's included is universalizing the housing choice voucher program. Now, your administration, the Obama administration, made tremendous efforts when it comes to advocating for and trying to expand housing choice vouchers in our country for good reason, because thousands and thousands of people are on waiting lists for housing choice vouchers in communities across this country. And, President-elect Biden has said, why don't we universalize this so that if you meet a certain threshold in terms of your income, then you can actually get a housing choice voucher. That would make housing a lot more affordable for a lot of families. It would, as you suggested, and as Raj Chetty's research has really shown, there's a great benefit for, give people more opportunity to live in higher opportunity neighborhoods. If that's their choice, I think people should have an option to live where they want to live. On top of that, there's also a proposal that I think is innovative and I think overdue, which is for an advanceable and refundable tax credit that could be used either toward homeownership, as down payment assistance, or toward renting. This would be the first time in a meaningful way that we invest in renters through our tax code. We have the mortgage interest deduction. Over the years, people have made different suggestions on how we could perhaps modify that and invest more of that in renters. But this would do both of those things and really give American families the option. Look, if you want to become a homeowner, it makes that easier. If you choose to rent, it's going to make that more affordable as well. And I think that that's a good approach.
You agree with that, Maurice?
I do. I do think that's a great approach. I think additionally, the federal government has a huge opportunity to be a stronger, more robust partner with a lot of great initiatives that are already going on the ground, as Secretary Castro was saying, that is missing the federal government is MIA to some extent right now. And that's, I'm looking at, for example, I mentioned the Bay Area, California and other places I know are, for example, using CARES Act dollars and other dollars now to attempt to reposition hotels that are vacant or going out of business for housing units for folks that are homeless. We've got the ability to reposition real estate all over the country to better serve homeless folks, to better serve people who are at 60% of their area median income or 80%. If the federal government works more closely with state and local government and the nonprofit and developer infrastructure out there that's doing this work. So one big opportunity is to really have the federal government leveraging the various players that really need to come to work on this issue if we're going to do it at scale. I think it's a huge opportunity for us, and I am optimistic, actually, and probably naively optimistic that we are actually at a juncture where we can choose again to have that kind of teamwork and to work at the kind of scale that we're going to have to do. Otherwise, we just will not have the supply necessary to really, in a long-term way, reduce and or eliminate our homelessness population around the country.
Thank you. Let me just ask you, just building on that. I think that for most of my life anyway, most people saw homeownership as a critical step in building any kind of wealth and embedded savings. And the loss of home ownership has led to an increase in the wealth gap since the collapse of 2008. As Julian said, we've tried to rebuild it, and I personally believe the Obama administration did a good job with the tools they had and what Congress would give them in overcoming that. But now, looking ahead to the post-COVID economy, and I give both of you a chance to comment on this, you seem to agree that there should be some flexibility in the government support, both for home ownership and for renting, because especially for younger people, they don't know how many times they're going to have to move. They don't know whether they're going to be enough jobs, let's say, in New York. That I have a nephew working there. I know all about it and what happened. And so I think I'd like you to talk a little about that, whether in the post-COVID era, we are in a position to know that we'll be shooting for 2/3 or 70% or more home ownership, or that we actually may have an economy that is so ordered at the roots that we have to have more renting over the long term, or at least the midterm.
You want me to start, or the secretary?
I think I still. Oh, yeah. I was sorry about that. I still believe that home ownership is a worthy and laudable goal. When I got to HUD as secretary in the summer of 2014, I got there during this period where we were just climbing out of the Great Recession. Things had stabilized to a large extent, but there was this reflexive hesitancy to embrace home ownership because of the housing crisis that we'd gone through and this narrative that had been set in the minds of policymakers and people across this country that the entire housing crisis and the meltdown was caused by people that took out loans that were too much for them to actually pay back, right? They bit off more than they could chew, which was a narrative that, I think was furthered by particularly Republicans that wanted to, pin all the blame on individuals and hardworking Americans instead of some of the banks and other institutions that deserved, I think, more of the blame. But I said very early on, I think a month after I got there, that it was time to end the stigma of promoting home ownership. That we had to get back to this balance of understanding the value of home ownership, which I do believe that there is a significant value there. At the same time, as you suggested, look, this generation is different, right? They're waiting longer to get married. They're waiting longer to buy a home. COVID has introduced a new level of uncertainty that none of us in our lifetime, have grappled with. So I do think that you need to devise policy that allows for people to be more opportunistic when it comes to either owning or renting a property. And from that standpoint, this approach that I mentioned, that President-elect Biden has embraced of an advanceable and refundable tax credit that would allow you to do either one, I think that that's a smart move right now, where we continue to see homeownership as valuable and I believe promote it, but at the same time, people an option who are living in a different world than we were, even 10 years ago, 20 years ago, give them what they need as well.
Yeah. Yeah, I think I am. Look, I think that if we're going to have any chance to materially attack the racial health, wealth, and opportunity gaps in America, home ownership has to be one of the centerpiece strategies. No ifs, ands, or buts about it. We have to do better. I think the home ownership rate right now of African Americans is around 40% or so. I think the home ownership rate of whites in the country is close to 30% greater, maybe a little over 30%. I think the gap is about the same with respect to Latinos and whites. Well, if we're looking at trying to promote and advance intergenerational wealth, you can't do it in a scalable fashion without home ownership being one of your primary strategies. So I think we have to get much more ambitious as a country, private sector and public sector, with down payment assistance, with forgivable loans, with ongoing housing counseling and financial literacy counseling, with repair and rehab tools, both financial and policy tools, with things like trying to make the cost of construction of a house much less than it is now. Manufactured housing is a strategy that needs to be used. I think this is one of the commitments that I would love to see the country make, public sector and private sector. If we're going to get at the wealth challenges, home ownership is still one of the most powerful tools. Let's put an ambitious spot on the wall to close the gap in the next 10 years, and let's go for it. I know we can do it. We have put people on the moon. We've got, SpaceX going to the space station. Let's have the same ambitious agenda regarding home ownership. That's what I'd like to see us commit to.
When I when I was working as a private citizen in the aftermath of Katrina in New Orleans, one of the most rewarding things we did was to support a group who were rebuilding in the lower Ninth Ward, a very poor area, environmentally responsible homes with materials that were more resilient and affordable, and with a real commitment to reducing their carbon footprint. And I remember, more than a decade ago, we had a single mom from that neighborhood who'd gotten a home that had 2 stories and 3 little bedrooms. She had 2 kids, and they just got their electric bill for July, which was the hottest July on record to that point, and it was $27. $27 because of the environmental savings built into it. And one of the things I think can be done to increase employment and make this whole thing, a real winner for poor families and people with lower middle incomes is to incorporate an aggressive energy efficiency and smart materials and all the whole works into whatever is done. We have only scratched the surface of what we could do. And this thing would be virtually self-funding if we did it with the maximum, scientific commitment to what we know the technologies are that work. So I hope, I'm glad to see that neither one of you is for easing up on home ownership. I think if the people decide to walk away from it because the economics of working in New York or San Antonio or you name it don't, require it or don't make it attractive anymore, that's one thing. But right now, we still don't have, under the current tax and economic system, we don't have any other way to help working folks amass wealth. At least I don't think there is a valuable, comparable alternative. So I think we got to keep it out there. And again, I just want to say a special word of thanks to LISC for, you've been at this for more than 40 years now. And it's astonishing what you do. And I was amazed when this whole crisis came up that I didn't think of you through housing as much as I did, getting money to people that they needed to stay alive. But that's the rest of our jobs too. So thank you very much. I guess the last thing I want to say is, what would you say to people watching this conversation? What can, if some business person watching this conversation, some ordinary citizen watching this conversation, what should we all be doing to help further the mission to which you've given your lives?
Mr. Secretary, I'll defer to you.
Yeah, well, there's so much. Obviously, there are a lot of businesses and private individuals that are contributing a lot to organizations, whether it's LISC or Habitat for Humanity or any number of organizations doing phenomenal work to provide more housing opportunity. But, if we take it down to a simple level, as you know, Mr. President, one of the big challenges with housing is that it's not the most glamorous issue. People don't put it right up there in terms of the issues that they say they care about the most or that need to be addressed urgently. And at the same time, if you actually have conversations with families out there, you know that housing is one of the biggest issues that a lot of families face everywhere almost. And so if I had one request for folks, it would be to use your voice and your platform to make this an issue that your policymakers not only pay attention to and care about, but do something about. And that's especially true for the business community. Making that link to creating greater housing opportunity, because that is good for business as well in so many different ways. It's a simple request, but I think one that is frustratingly elusive, because every time, we know that there's a big challenge here on housing, but it never gets the attention or the investment that it deserves. And only through more voices using their influence to bear on policymakers will that ever change. Because unfortunately, so many of the people who need this housing opportunity, they don't have lobbyists in Washington. They're not the loudest voices out there, but that need still exists.
And I think I would say, Mr. President and Secretary, we're in a moment right now in the country, a moment when I think the country is better recognizing, or I should say, is more woke to the fact that one of the greatest threats to our democracy is the racial wealth, health, and opportunity gap. You can do something about it. I'm going to give you an unabashed ad here. We are launching a project we call Project 10X. It is an effort to raise $1 billion, about 100 million in grant, 900 million in low to no cost loans. We're going to do 4 things with that money, all designed to get at this racial wealth and health and opportunity gap. We're going to invest in home ownership and small business ownership. That's one thing. Secondly, we're going to invest in helping people of color, BIPOC individuals, helping with savings, credit, and access to banks, with a particular focus on actually investing in Black-led banks and credit unions and BIPOC-led banks and credit unions. Thirdly, we're going to use that capital to leverage good jobs. We're going to make loans in exchange for the businesses hiring Latinx folks and Black folks and paying them good wages and benefits. And then fourthly, we're going to invest in those community assets that we think are the most powerful levers for wealth creation: education, arts, broadband, safety and justice, and health. We can give the businesses and the individuals a vehicle right now to do something about this. And my hope is that people recognize the fierce urgency of now, at this moment, when we've got a health pandemic, a recession, and a racial reckoning, and decide to be bold and ambitious and join our effort or join other efforts. It doesn't matter. But now is the time to actually invest in trying to close these gaps, because I think it's the greatest challenge to the American democratic project that is still underway. So my hope is that people will join. I will say I have been really encouraged by what I've seen, particularly in the private sector since March. However, this is not a summer of 2020 endeavor. This has to be, we are calling this 10X because we need you for the next 10 years at least.
I completely agree. I think that you cannot either overestimate or underestimate the significance of the political climate. But what people are really saying is if we're going to go forward together, we're going to have not just political inclusion, but economic inclusion and social inclusion. And it can't just be a slogan for a day or a week or an election. It's got to be a way of doing business with your neighbors and with the community and the country at large. So I thank you. I thank you both so much. And let's keep at it.
Thank you. Thank you both. Appreciate it.
All right.
Everybody stay well.
Yeah.